Corporate finance practice problem using Excel. Stocks, rights, investing scenario. Get ready, it's time to take your chance with corporate finance. Here we are in our Excel worksheet. If you have access to the Excel worksheet and would like to follow along, note that we're in the practice tab as opposed to the example tab. The example tab in essence being an answer key. Information on the left-hand side, we're going to populate that into the blue area on the right-hand side. Looking at a rights type of calculation once again, general scenario for the rights being corporation needs to generate cash, needs capital, wants to then issue stocks, wants to give a benefit possibly to current stockholders by giving them rights to be able to buy possibly stocks at the discounted price. If you want more detail on the basics of that, take a look at a prior practice problem. Here we're going to continue forward with an investment type scenario. So we have the rights investing. We're going to assume we have cash of $10,000. The rights offering for the desired stock are going to be rights offered per share. So per share that are out there, corporation giving then one right. Rights needed to buy a share at the discounted price, meaning we need 5 rights then in order to purchase a new share at the lower price. The cash or subscription price we're going to say is $85 for one new share at that discounted price. So the market price for X rights is going to be $97. That's in X rights, $97. If we invest the rights and the market price for the X rights stock goes up to $101, we want to think about what the scenario will be there, and then we'll think about the scenario if we invest in the stock and the market price for the X rights stock goes up, what would be the difference, and then we'll take a look at it if the stock goes down. So similar type of scenario, but with the stock going down. So let's calculate the value of the rights then. So with the value of the rights, we're in the right value during the exercise of rights period. That's going to be the stock price minus the right subscription price divided by the number of rights needed to buy one share. Notice we don't have the +1 then in the numerator in this case. So we're going to go then up top. We're going to say the market price at this point we're going to say is the 97. That's the market price X rights. And then we're going to compare that to the cash we need along with the rights, the 5 rights and the cash. So we're going to be able to pay the discounted price of the 85, underlining that, home tab, font group, and underline. That'll give us then, we'll call the numerator or the difference, which is going to be the 97 minus the 85. The denominator then we're going to be picking up, which will be the number of shares or the number of rights that will be needed, which we said were 5 rights in order to buy one share. So we're going to go to the font group, underline. That's going to give the value of the rights. Let's say value of rights is then going to be equal to the 12 divided by the 5. 12 over 5. Let's add some decimals, number group. A couple decimals, we're at the 2.4, $2.04. So the rights that could be purchased, how many rights could we then purchase? We're going to say, all right, the cash that we have to invest is going to be the 10,000. So we'll say we got 10,000 that we could invest. And we're going to say the value of the rights is going to be equal to the 2.4. 2.4. Let's add some decimals, number group, add some decimals, and that's going to give us the rights that could be purchased. We'll say rights that could be purchased at the 10,000 divided by the 2.4. That's going to be the 4,167 up. So if we took our $10,000 and purchased just the rights, then we're thinking we can purchase the 4,167. Let's underline here. We're going to go to the font group and underline. And then let's calculate the shares that we could buy at the X right price. What if we were to buy the shares at the X right price? We're going to say then we've got the cash is the 10,000 and the market X right price we're now saying is the 97. And so if we underline that font group and underline, we get the total. Let's pick up the total there, which is going to be equal to the 10,000 divided by the 97. So about number group, let's add some decimals here. Let's add some decimals here. Now obviously we got to round the number of rights that we have here, and we got to round, we're going to have to round the total total that we have down here, but we'll just take a look at the decimals and work with those rounded numbers. Obviously, again, take into consideration the rounding that would be involved. So with our $10,000, we could purchase just the rights up top, or we can purchase basically the shares at the X-Right price at the 103.09. Let's take a look at the comparison of what would happen under those two scenarios, thinking about a change that could happen in the future. So now, if we invest in the rights and the market price for the X-Rights stock goes up to 101, what would happen? So we invest in the rights and the market price for the X-Rights stocks goes to 101. What would then happen? So we're thinking the profit on just the rights themselves will pick up then the 101 is going to be the new price. We're going to compare that to the cash needed to exercise the right. The cash needed to exercise the right, which we're saying is the 85. The 85. Let's underline that by going to the font group and underline. That'll give us, we'll call the numerator, the difference or numerator, which is going to be equal to the 101 minus the 85. That gives us 16. And then the denominator is going to be the number of rights that are needed. So the number of rights that are now needed, we're saying are still 5. 5 rights needed to take advantage of the discounted price. Let's underline that, font group and underline. That'll then give us the value of rights. So we'll say this is going to be the value of the rights at this point is going to be equal to 16 minus 5. And so, I'm sorry, that's going to be equal to 16 divided by 5. Adding some decimal number group, a couple decimals, the value being $3.20. That's the value of the right. The cost of the rights, how much we paid for the rights, then we're going to say is equal to what we paid down here, which was the $2.40, adding some decimals. So we'll go back up top, go to the number group, add a couple decimals, underline it, font group and underline. That's going to give us a difference there, which is going to be equal to the $3.20 minus the $2.40, adding some decimals, number group, adding a couple decimals. So we got the 80 cents. And then the number of rights that we could have purchased. How many rights could we have purchased? We're going to be picking up then the number of rights at the 4166. This is rounded once again. So 4167, font group and underline. The profit of the rights then would be equal to the 80 cents times that 4167. So there we have that. Now let's compare that then if we purchase basically the stocks. So if we have the sales price on the stock now, which we're saying that we said was the 101, it went up to 101 and we purchased it at the cost of the 97, comparing that to the 97, the X-Rights price, that's going to give us then a difference. Going to the font group and underline, we then have a difference, difference of equal to or plus equal the 101 minus the 97 or 4. So we got the $4 difference, and then we have the number of shares, which is going to be equal to the shares that we could have purchased, which we calculated to be about, and again, take into consideration rounding 103, about. So we're then going to say we have the 103, font group, underline, and then we'll say this is going to be the profit on stock. If we choose to purchase the stock as our investment, 4 times the 103, we get to the 412. So obviously we worked out better on the profit on the rights, basically in that scenario. So let's think about the opposite situation. Say, well, what if then, if we invest in the rights and the market price for the rights goes down to 80, so a substantial decrease, and we'll do the same type of thing. What if we got the investment? So what's the loss going to look like on the loss side of things? Well, we can say, all right, then let's do the same calculation. The market price now is going to be, let's just type it in there. It's going to be the market price X rights is going to be, now we're saying is 80 equal to the $80. Comparing that to the cash we need, let's pick it up top, same calculation up top. And that's still at the 85, so we have a negative factor here. So this would be, you would think, hopefully an unusual situation. This would be the numerator, and then the denominator is going to be 5. So we'll pick up the 5 on the denominator. Let's just call it denominator. Pick up the 5. Oh, let's pick it up from up top. We'll say this equals the denominator. And that's going to be 5. And then this would give you a -1, but you can't really have a negative on this calculation. So therefore, we're going to basically default this to 0. You could do an if-then calculation. If it's negative, then make it 0 or whatever. But, you know, we're just for practical purposes, we'll put 0 there. So the cost, and then of course, if you pick up the cost of the right, and that's going to be the value of the right, which would be 0. It has a negative value. So the cost, it cost us then the 2.4, cost us the 2.4. Let's add some decimals, number, a couple decimals there, and then the number of rights that we purchased. So the number of rights that we purchased is going to be here. Well, let's continue here. Actually, let's say this is going to be the difference, which will give us that negative number, which will be this minus the 2.4, which is the negative 2.4. Numbers, add a couple decimals. So there we have that. Let's underline this one, font group and underline. And then we've got the number of rights that we have. So we lost that 2.4 times the 4166 about. Going to the font group and underlining, that's going to be our loss in this case. This will be the loss on the rights. And that's going to be equal to then the 2.4 times that 4167. There's our 10,000, of course. And then if we go back on over here, well, what if we purchase the stock? Then we're saying that the sales price was 80. So we got 80 on the sales price. And then we've got the cost. The cost is going to be equal to now the 97. The 97 was the cost. There's our loss. This is going to be 80 minus the 97. I'll call that the difference. Underline here, font group underline. And then the shares that we're taking in. Where'd my underline go? Font group underline. And then the shares that we picked up were the 103 about that we calculated over here. So we're going to say font group and underline there. And that's going to be our loss on stock. And that's going to be equal to the 17 times the 103. So notice, of course, we have then, if we think about the purchasing or see if we can pick up a profit, the profit is going to be much higher than the actual stock price here. But if there's a loss, then we have that potential loss that we don't have as much of the potential loss on basically the downside is the way the scenario works out here.